Hey, everybody. Welcome to This Week in Pre-IPO Stocks podcast. With me, I have Evan Cohen, Chief Founder and Chief Operating Officer of WithVincent.com. It's a media company focused on alternative investments. And Nick Fusco, CEO of PM Insights, a pre-IPO secondary market pricing company. I'm Aaron Dillon. We do venture capital funds for RIAs at AG Dillon & Co. Okay, guys, Revolut is absolutely killing it. They just came out with their 2024 kind of update. Revenue's up 72% to $4 billion. Profit before tax is up 149% to $1.4 billion. Customers are up 38%. Customer balances are up 66%. They're crushing it, right? So the company's at a $44 billion secondary market valuation. That's 11x revenue multiple. They've been pretty much flat, though, since October of last year in the secondary market. So maybe we'll start, like, Evan, let's start with you, man. Like, what do you think of Revolut, right? Do you think 11x revenue multiple is good? Should it be higher? Like, where you at? Where's your head at?
It's expensive. Certainly expensive.
Too expensive. All right. I wasn't expecting that. Yeah, far away.
Yeah, we've been talking about this for a bit now, and I feel like I've made my opinions known about Revolut and just this entire segment. I mean, look, at the end of the day, $1 billion revenue or on $4 billion, $1 billion profit on $4 billion revenue, you're looking at like 25% margins. Pretty decent for fintech, but I mean, they've got what? 50 million customers. I mean, if you look at a company like Nubank has 100 million and they're worth 58 billion. So, and then you look downstream, you look at a company like SoFi, who's probably a market comp in the United States, and they're trading at 3.3 to 4x, revenue. So look, I think it's still pretty expensive. I think that like it's a competitive market. Margins are going to get compressed on fees. I think they're doing a good job of penetrating markets. They've got a great brand, but yeah, I still feel it's expensive.
Yeah. Okay. So that's an interesting, especially public comp. I mean, you can't argue with that, right? So, but Nick, like, if you think about fintech companies, right? I mean, there's Revolut and Chime. There's some like crypto related shops, right? But there's not much else out there in the way of fintech these days, right? In the pre-IPO stock world, like, what do you think?
Well, I mean, you do have your other quasi neobanks, so like you mentioned Chime, or you have Monzo. Ramp is a little bit different,
right?
But in the sector generally, it's interesting because we would see the fintech sector up about 27% in the last year, while Revolut was up 133%. So those numbers blew it out of the water in terms of what I was kind of expecting, because I remember having this podcast prior to that tender offer really hitting that put them at a 45 billion. I was like, oh, that sounds expensive.
Yeah.
They're right there. They took a little bit while of time to reset to that level, and now they've hit it. But also just kind of those figures that you mentioned, they're way bigger than you would expect from the number of customers that they acquired too.
Right.
Like, all right, did they just like pump those numbers up, increase a bit of the cost, or decrease the cost, increase the incoming revenue? And that's gonna be more competitive, as Evan said, once they come to market properly. So I think they've killed it in the short term for sure. Will that remain? I'd probably err towards Evan's sentiment on if it's something that could stick around for a considerable amount of time on that multiple.
Can I add one thing too, just to note here? And this is just something for anyone who's looking to invest in fintech, you need to consider, is that these numbers look at a year-over-year growth of account balances, wealth management balances, et cetera. Remember, the market went up a lot in the last year. So they could have maybe acquired no new customers and those balances would have appreciated. And those balances could also depreciate. And so you look, okay, like how much is the average client might have more money because the markets went up. They could easily go back down. I've seen a lot of companies use their assets under management as a metric to demonstrate their success. And a lot of times they don't look at the new customer numbers or they don't accrue the new dollars on top of the incremental dollars on top of what they already had. And so it can look a lot better on paper than it actually is in reality.
So you're saying year to date, let's say if 2025 started off as a bit of a bust, it might not be a good thing for Revolut? How could that be?
Well, it depends on when these numbers are, correct?
Yeah, Aaron, were those year-end numbers?
Those were year-end 2024 numbers. Yeah, that was my
There you
read.
go.
Bang, bang, bang.
Yeah.
Nice.
So it's something to consider because those numbers they fluctuate with the market, and we saw this in 21 with a lot of the fintech companies where their AUMs just ballooned, and people were like, "Man, these companies are rocking! They're acquiring new customers," and a lot of people did not take into consideration how much of the market itself and the balances people were getting paid more, inflation, investment balances were going up, were really a part of that. And so it's important to sort of try to figure out what the net new dollars are compared to the aggregate.
Right. I mean, I'm just like, I guess what's surprising to me is like fintech was big for, call it 10 years there. But I mean, there are really no investing private companies that are interesting. There's nothing in insurance. There's nothing in lending that I know of, right? That seems particularly compelling. I mean, the only two that I think are, you mentioned Monzo, right, Nick? That's, I guess, an interesting business.
Maybe Adapar.
Revolut's an interesting one. And then Chime. Like, those are the only three that ever kind of hit my radar, right?
What about Betterment's got over $50 billion under management.
That thing's dead. That thing's a zombie. I mean, like, nice people over there, but like that thing's like, there's nothing there. It stopped growing. Like, that's a company that will be private forever until a private equity firm comes and takes it out. Right.
I think you should take another look at it. I feel like their assets under management are growing substantially, actually, because they've pivoted away from direct to consumer to going after business 401ks.
Okay. Yeah, sure. And I mean, they also have an advisor business too, but I got to tell you, like, that's like a really competitive market. There's not a lot of revenue in those businesses.
Yeah.
Right.
It's hard. It's very hard.
I got to tell you, all the time I was in fintech, right? Because I used to work at fintech companies. Like, the only ones that I think really make sense are lending. That's the only one. It's the only one with real revenue. If you're going to be in technology. Plaid's an interesting business, I guess, that scales. I mean, it's one-dimensional. Payments, yeah. I mean, it's like, yeah. Payments is a fintech company. Stripe's a fintech company. That's a good point, Evan, right? On the acquiring side.
Mm-hmm. You're right. I mean, at the end of the day, when you're looking at the banking businesses, the businesses that are making money by acquiring assets, lending is the best business model because it's the highest margin. Outside of that, you're scraping basis points, which is really, really challenging.
But investing, I think, has been proven to be a non-starter. I mean, I think Robinhood snuck through, right? But I don't know. Lending.
Investing, I guess you have all the crypto exchanges that came through, like your Krakens of the world and things like that. They had to come with a new market to find their way through. But then I did throw Adapar, which is different. It's not a bank, it's not an investment platform. It's more infra play. But they've been an interesting one to watch as well. And then
it's just anything with the sophisticated customer on the other side of that. Just margin compression's it's too hard. Like, the crypto stuff's interesting because you make a huge spread on crypto trades, right? So, that's a big revenue opportunity. You can step in there and make a lot of money, right? Lending, I feel like, is the same thing. Where technology kind of steps in is like alternative underwriting. That's interesting, right? Where you can kind of do alternative underwriting. Klarna's doing that, that stuff's interesting. And then scale. I mean, Stripe kind of like and Adyen both, took advantage of the opportunity that none of the acquirers were really able to do internet-based acquiring, right, in a proper way for internet companies. So, or e-commerce over the internet. So, like, those things are all interesting. I don't know. I don't see it on investing. I don't see it on deposit taking sides. There's just nothing new coming down the pipe. That's all. Like, if you had a fintech venture capital fund and you were going to come and invest in something today, like, what's coming down the pipe?
I can tell you. And to be clear, I think that you have a very important designation that all the companies you named are generally direct to consumer retail fintech, which is where I agree with you. It's very challenging on the retail side because customer acquisition is expensive, and typically the dollars volume is not like you have to have a ton of aggregated client dollars to make it worth it. But to Nick's point, I think that there's a totally different element of fintech on the B2B side and on the institutional side. Look at a company like Adapar. I can give you a company like iCapital. Companies that are trying to disrupt compliance, look at like Alloy. I mean, if you look at the fintech platforms, they're investing in, automation for compliance, KYC, AML. They're doing wealth management at the very upper echelon. So like AngelList, for example, SPVs, customer accreditation, document storage, K1s, and then you see like access. So you have, iCapital, Yield Street, platforms that are trying to provide institutional dollars to connect investment opportunities with like high net worth individual clients like Opto. And then you have, of course, like an Adapar, where it's just really like wealth tech, advisor tech, another company, Altruist, like they're crushing it. So there's just a lot of, in the fintech, if you segment it out into the institutional accredited B2B play, it's very different than going retail.
Yeah, that's fair. Yeah, I mean, maybe that's a fair point. Maybe I guess where my mind is going is you're seeing all these high flying AI related companies, and you just don't hear of anything like that anywhere close in the fintech side, right, of the business.
Yeah, I agree. Consumer is really hard. It's too expensive.
Consumer is hard. It's a good point. So maybe I'm not being a little unfair on the fintech thing. It's a good point.
Yeah, I mean, I don't think fintech valuations have effectively really totally come back to where they were in the 21-22 cycle. I mean, Adapar is a great example. I think they did a tender offer recently. But like outside of that, you haven't really seen a ton of more of dollars going into it beyond like Plaid, et cetera. Right. So it's just kind of like these companies figured out how to right the ship, get profitable, not raise more capital, and just kind of keep the things going for the next super bull market.
Right,
yes.
right.
And just an example on that, the financials across the private sector are up 73% since 2020, December 31st, 2020. So that's not outrageous. Revolut is up 360, Adapar is up 42, but this year Adapar has been up double what the other financial companies were.
Right. What's that on an annualized return though, Nick? Like that's 73, that's like 5 years, right? So what is that, like ballpark 10% on probably an annualized return perspective?
You do that for me and then you back it in.
Yeah, I mean, I would. That's got to be like ballpark 10% with the compounding in there. I mean, I guess that's interesting. I don't know if you're going to be if you're a private market investor though, you're probably, especially in venture, you're probably looking at something north of 10%.
You should be, but
But
then again, 2022 was so hard generally for venture. We took such a big knock on the head at that point. It wasn't the same as the public market there. So
fair point.
Yeah, if we stretch that out and go not back 5 years, go back 10, I think we're going to be beating 10%.
Yeah, fair point.
But the interesting thing though is that, forget startup land for a second. We have seen such a massive transformation at the in the actual markets, from big banks, from private credit, from private equity. Like we're seeing a massive renaissance in those sectors, in technology. I think of Aladdin's acquisition. Like there's just so many different things that are being acquired. I mean, it's very interesting that it doesn't get a lot of like noise, or it doesn't get a lot of news hype, but it is happening, and you're seeing it. Just it's much more mundane, I guess.
Yeah. So there's your Prequin going into working with the Aladdin. That's $3 billion. You had AlphaSense, the acquisition of Tegas. These are some chunkers
for sure,
and they are mostly like your B2B, right?
Yeah.
Infrastructure.
Yeah.
That makes sense. I mean, I could definitely see some AI related infrastructure stuff coming through and getting acquired. Just don't see that yet, right? That's all.
Yeah.
I don't know. I'm just maybe it's like, like obviously we focus on the, top 20, 30 largest pre-IPO stock companies. At least that's what I do. And, there's a handful in there. Evan rattled them off earlier. It's just nothing gets me kind of like super excited. Smaller emerging stuff coming up. I just don't get excited about anything that's coming up the pipe. That's all.
Fintech is unfortunately not as sexy in a lot of ways as other businesses, and it takes a lot longer. It has a lot more ups and down cycles and hurdles and compliance and complexity.
That's what it is, I think, Evan. It's just it's like the cost of capital to get going on some of this stuff is. We've talked about that before, right? It's just much higher in fintech land than it is with some of these other businesses, perhaps.
And it brings me back to my point about Revolut, which at the end of the day, like 25% gross margin's pretty good but like that's, in the realm of financial services. When you're looking at tech, you're looking 50-60%. It's just not in the same multiple.
And it could come out of nowhere for other areas of tech. You know, whereas in fintech, it's stickier. TikTok could go away, but
Yeah.
let's see, right? But it came out of nowhere as well.
Yeah.
So
Yeah.
so
Yeah.
more consistency, I think you're finding, and the cycles are more long term than super short. Like something comes out of the blue and just completely knocks out your business. Probably
Right.
won't happen to Revolut. It'll take a
That
little
is true.
bit of time.
That is true. Okay, let's talk Shein real quick. So Shein's
Speaking of, there you go.
yeah,
Here
let's
we
talk
go.
about something that could get crushed with regulatory change. But so Shein is a fast fashion company. I'll call it that. It's out of China / Singapore, depending on how you want to look at it. They're going to have an IPO. They were going to go public in the US, but couldn't pass muster with the exchanges. So they're going in London now. The latest thing that I saw is they're thinking about a $50 billion valuation. But obviously I think that was actually before the tariff items, right? So these guys effectively relied on this de minimis rule on shipping. So effectively, they didn't pay any kind of fees at all when they were bringing stuff in, because every single package was its own like small little package, right? When it came across the line. But now that's gone. And it looks like they're increasing their prices. So they increased prices 377%.
Ooh.
Broadly across their entire base on April 25. So let me ask you guys a question. Would you, Nick, we'll start with you, man. Do you what do you do with
this is a Temu
company
shirt.
like this?
Is that it?
Is it
You're
really?
wearing Temu?
I was
No.
going to say it looks great. You look good. Yeah. But far away, man. What do you think? Can you invest? I mean, obviously, if it's going public soon, you're probably not buying it in the private market. You'll just wait until it goes public. But I can't imagine when this thing comes out, people are going to be scrambling for it. It is. Revenue's down. The last time I checked, revenue is down, and now this tariff thing, that's tough, man. Those are some tough headwinds, right?
As a private market investor, at least on depth, we've seen everything completely disintegrate in terms of bid or offer supply, and it's just gone. So I think you don't want to buy into something that is slated to IPO, that is obviously not a high probability of actually IPOing, and if it does, it won't go remotely near the price which the markets were expecting the open, right? So no, if I'm the private investor looking at the stock, I probably won't touch it with a barge pole unless someone's just trying to liquidate, and it's something where it could be valued 1 or 2 or 3 years from now.
Right.
And who knows? Actually, if I got this at 20 cents on the dollar, that could be amazing. A 10 billion valuation, not a 50. But I'll have to know full well that the tariffs are going to disintegrate, or there's enough of a market outside the U.S. that will completely pay for this whole thing.
Right.
So that's the only way this is a good play if I'm a private investor. And then I think it's probably real tough for them to go public, unless they're very, very happy to take a big hit on that initial valuation so that they can get some sort of pop and show the world, we're going live in London. This is where we want to be. We see this as a worldly play, not just a US is the biggest market. We can make our money elsewhere. So that's why I think you also saw costs remain flat across other countries where they purely increased in the US. So
yeah, got it. What do you think, Evan? Any thoughts on Shein?
Yeah, I think that it's very unfortunate. This is like an unforeseen, hard thing that if you're a long-term investor or a private investor putting money into this company 5 years ago, it would have been very challenging to forecast where we sit today and this is happening. So it's just really just unfortunate bad luck. And so I think the reality is that they have to right-size their valuation given the new paradigm of environment that we're in. I think if they did that, it would require some investors, especially late investors, to have to resize those positions and revalue them, which is going to be painful. I think that's a reality one way or another that's probably going to happen. I think on the inverse side, though, where the good news is that I'm not a believer that people wanting cheap goods is something that's going away. I think at the end of the day, people want cheap goods. And I know there's a lot of people that are, oh no, we should pay more for, American made things. And consumerism is really bad. And there's you hear a lot of this from the administration and from some people on talking heads on Twitter. I don't think that's going away. I think people want cheap goods. I think people like Shein products. Clearly they have a great customer base that really appreciated the value of those things. I'm a believer and an optimist that we will get somewhere on the tariffs that they were lower than 145%. So I think
Right,
that that's
right,
going to
right.
come down. And
Yeah,
I believe
right.
that there's actually is somewhat of a global market to what Nick said, that people are going to want these goods somewhere. Now, obviously, the United States consumer can afford to spend more than the majority of the world. So that might hurt margins, but that doesn't mean that there isn't demand on a global scale. It doesn't mean that they can't make good margin in places like Europe, places like developing countries in Asia, etc. And so I think that this is a long-term play if they're willing to reset the valuation to something reasonable today. If you're buying it where it was, you're in a really tough spot.
Right. Well, I mean, I got to tell you, if these guys are going to go public while this, while the China-U.S. tariff battle's happening, I mean, I think that's a non-starter. My money would be there waiting until that gets sorted and kind of settles in a little bit, and then you can start to think about what that IPO would look like. So, but that could take a long time. I mean, I hope it doesn't, for the U.S. and China to work out this tariff thing. But I mean, I was reading some stuff for the weekend. Like they're talking about this being like several quarters, right? Before that, I mean, when I hear someone say several quarters, that's like 2026,
Right? Yeah.
right? That's not happening like now.
God.
So, I mean,
16 quarters. How about 4 years?
Yeah. Well, listen, I got to tell you something. I've done a lot of stuff with China in business in China. I don't see that happening fast. I really don't. You know what I mean? And I think the ability for the Chinese folks and Chinese government to shoulder that pain, I think, is a lot higher than most people give it credit for. So I wouldn't be surprised to see. Yeah, go ahead.
Yeah, I'll just talk over the sirens from New York in the background. But the expectation might be if they can, instead of waiting until 2026, maybe 2027, let's make this a non-Chinese company, as we were saying. It's a little confusing. Are they Singaporean? Now they're going to move some of their production elsewhere as well. Then they come IPO under that new kind of situation and setup, knowing that they've locked in where the tariffs need to be, and the tariffs are only going to go in one direction, hopefully from here. It was we hit the market too hard. Let's peel these back slowly, right, or quickly potentially.
Right.
That's got to be the play. You got to play both hands. You can't just wait for the tariffs to change. You may have to change your location or status as a business and play the game.
People are doing it with India.
Yeah, that's true. I mean, look, this one was tough. I mean, revenue was already coming down. Now this piles in on top. I don't know. This one doesn't give me the warm and fuzzies, right? But I mean, look, if you do believe that this thing's going to be private for some more time, like Nick, to your point, the management team can make adjustments. And, like Evan, if you can get it at a good price, especially if someone's like selling LP interest or something like that, you can swoop in and buy it, at a fair valuation. Like it might not be a bad investment here, over the next couple of years.
You could make that same argument for almost all of the Chinese tech stocks.
Yeah, but Chinese tech stocks, I gotta be like those poor companies, man,
I know.
on the global stage just get no love, right, at all. So, I memean, they're gangbusters in China. I mean, obviously the Chinese consumers love it, but this company's I get it. They make their stuff in China, but they sell it to everybody else in the world. They don't sell anything in China, right? So, but they got that, to your point, Evan, they got that Chinese tech company overhang, right? You know what I mean? On their business, it seems like. So
this will be real interesting if we don't see that revenue continue to trail off. The revenue growth of the company. That's a pretty good sign, right? But if they were just puffing their chest out to get to the IPO and then drop it on the retail, drop it on the public, you're gonna find out pretty damn quick in the private market as well, and they're gonna get hit twice, right?
Yeah.
Market timing just blows up in their face. But if it just has that sustainability, 6 months from now, that could be an awesome bargain for the investor.
Yeah.
So.
It's going to be interesting to see what happens here with this, especially with these tariffs. But okay, let's talk autonomous driving.
Oh yeah.
So U.S. regulators came out and basically gave the green light to autonomous technology companies and car companies to be able to implement this stuff and not face effectively liability. around the technology. That's a big move, right? So Waymo is right out there right now, and they're expanding pretty quickly, right? They're in several U.S. cities. I know Tesla was trying to get out, but the prior administration wasn't giving them the green light. Now it looks like they got that, right? So, but you know, there's not. I was taking a look at some other companies out there. There's like Neuro. There is a company called Zoox. I think I'm pronouncing that right. Applied Intuition, Ghost Economy. This is not probably a very robust list, right? I did my best to kind of track this down for the call, but what are you? I mean, look. I'm like as a father of a 13-year-old child. I'm convinced, and three kids, right? I'm convinced that probably none of them will end up with a driver's license or have to drive, right? As they get into their 20s. I mean, obviously we live in New York City, so it's a little bit different, right? With the cabs and the subways and buses and Uber and all that, right? But yeah, like I think this is it, guys. I think this is the end of people driving cars. Like we're now going to be heading on a path of like autonomous driving's everywhere, right? But any kind of strong thoughts about this type of emerging technology and or any companies that you're aware of that are particularly interesting in the private space?
Sure. Yeah, I'll just hop in and speak to the robo-taxi versus the Waymo and things of that nature. A lot of what's been done, I think, with having so many Teslas on the road, gives them a pretty cool head start. And same thing with Waymo. The number of years they've been on the road in San Francisco, at least, and now elsewhere. They've
Are you saying for data, like the data, Nick?
Data,
or like what the data? Okay,
that's a massive data play. They've got a really good sense on how computer vision is meant to work in the context of the car, how to approach intersections, people, bicycles, every aspect of that, and then understanding those roads. That's going to be, even if the administration kind of opens the doors and says everybody can play now, how many of the other car companies, the big Ford, GM, of Chrysler of the world, have had the ability to take in that much information and been on the road that long with all those cameras? And
right.
That's an information data play that I think those guys have done such a brilliant job on. And I forget if it was like David Letterman or Jay Leno's son interned, I think, at Tesla, and he's like, "Dad, they're not a car company, they're a data company." And he's like, "Oh, it makes sense." It's very, very interesting how much intel they were able to bring in and train. Not that you can't catch up, but the fact that they've had so many years of that information coming in, just for the very low level driverless pieces, let alone what they're going to do next. So,
okay,
I'm
so then
as a data company.
Then Evan,
yeah,
right. So Evan, then that's that next point. Then, like, even if you did have an emerging kind of autonomous driving software company, right? I mean, that's pretty tough to compete with Waymo and Tesla with all the data. Like, they're not going to have that data. To Nick's point, like, is it kind of those are the two horses to pick? You're either buy Tesla stock in the public market if you want to tap into this kind of emerging technology, or try to wiggle your way into Waymo, which is like, I think it's nearly 100% owned by Alphabet, right? Waymo. So, I mean, what are your thoughts? Like, is this kind of an uninvestable opportunity in the pre-IPO stock market, or do you think there's maybe some companies that might crop up?
I do not. I think it's absolutely investable, and this is something I've been tracking for over a decade now. In fact,
I agree it's still investable. I'm just saying there's a nice head start, but I hope it's investable. I think this stuff is too much fun as well.
Yeah, in fact, this is the impetus of my initial NVIDIA purchases in 2014. So, like,
nice.
Self-driving, big believer in it. I think it's absolutely coming. I think that while there are some brands that have head starts, I think distribution remains to be a massive opportunity. I think sleeping on Uber is a total, like, silly. Like, you should be looking at that if you're looking for investment opportunities beyond Google and Tesla, Alphabet and Tesla, because they've got massive distribution, global distribution. Look, there are over 8 billion people in the world. This is going to be arguably as significant of a paradigm shift as AI. This is going to change the way that every single person moves around their environment over the next decade. assuming we can, and I'm very excited back that there is some like regulatory clarity now and some easing of regulations to make this more applicable to some bigger cities. I think we even talked about it on this podcast, but I also believe that once distribution becomes competitive, there will be other players looking to gobble up companies. I think self-driving at the auto manufacturing level, you look at the Fords and the GMs, like they acquired Cruise. That didn't work out so well, but as soon as this becomes once it hits the tipping point, everybody will be looking to capture some of the margin here, and there will be a lot of opportunity to acquire for M&A, for subscription services, don't forget about trucks and industrial, and like commercial vehicles across the board, military. And so, yes, it's absolutely investable. There's a lot of opportunities out there, even at the early stage. Don't get caught up in the hype of just the two.
Okay, that's interesting. Are there names? Are you able to share any names that you're looking at in the private space that you particularly care for? Anything come to mind? Or if that's proprietary, I understand.
Well, none of this is investment advice. Let's be very clear.
Yeah,
but I don't have any off the top of my head, which just because I'm drawing a blank at it. I know personally, this is one of I think people are investing in NVIDIA because of the AI chip and the data center play. I think you definitely, self-driving cars is a massive opportunity for them, that it's going to be global. It's one of my reasons for picking up a bunch of Uber stock over the late periods is because I'm a big believer in their distribution, So
hold on, with Uber, let me ask you though, for Uber, are you talking about that they would use self-driving technology, or they would kind of buy their own fleet of car, like from Tesla perhaps, and then
currently
use their distribution network to drive revenue? Or how do you think about that?
Look, Uber is in like 80 countries right now. They've got hundreds of millions of users who rely on them for getting from the airport to getting around town. You can hail a Waymo from Uber, the Uber app, in Texas right now. So I can see a world where you have like a bifurcated market. You have the service provider level, which could be the Teslas, or could be the Waymos, or could be any competitor. And then there's the distribution layer, which is like, how are you getting into ordering those vehicles, managing the fleet, et cetera. And so look, at the end of the day, Google and Alphabet have the advantage of being first to market in a lot of the places that they're operating in, and they're able to scale that way. But in a competitive market, and if you're trying to catch up to them, you're going to try to hijack your growth opportunity, which is going to a place that has a massive distribution, which is Uber, which is Lyft, which is Revolut, which is places where the app is already installed on their phone, and all you need to do is fulfill the service, and that will happen. And I think that it creates a massive opportunity for any of those companies as well as just an acquisition play. Like if you're building a self-driving startup trying to compete, you could buy any of these apps that are that just have user bases and download install bases.
Right. Well, I love this concept, right? I mean, not having to drive is better than driving. Like I just drove down to Northern Virginia, and the whole time I'm driving down there and back, I'm thinking, wouldn't it be nice to like sit here and work instead of like sitting here staring at the road driving this car? You know what I mean? Like it's on my mind now. So. And then, like I mentioned, with the kids coming up, it'd be great if like they also didn't have to drive, or anybody living in a city wouldn't have to have a car anymore.
Yep.
Right. I would think.
Or they could have a car,
like why drive? Why park it? Oh, exactly. Yeah. Which, and then, or defer costs 100%. I'm right there with you. So like, I mean, it might be interesting to see for folks that live in the suburbs. I'm not one of those people, right? No, all three of us aren't, right? But like, it might be interesting. Those folks, like, would you be willing to give up, your car that you can just get in and drive? So that, I mean, you could obviously have your own car where you're not using a service, right? To your point, Evan, where it drives, it's self-driving. I guess that's one thing. And then, or do you call it the service?
Right. But you also have both sides of it, right? Because let's say you need to go to the grocery store and buy groceries. But now the other side of that is you've got, anything that you need to go and get can also now be logistically planned and transported over to you. So you look at Flexport. Flexport kind of blew up. That didn't go particularly well. You've got companies like Zipline. Maybe it's going to hold its own, but that's pretty far down. Then you've got, GoPuff, Grub Market, all these other companies that are focused on transportation or logistics, whether it's going to be the infra side or actually just the doing it, like via transportation. I used them for a long time, getting to and from work. It was just so much cheaper. That could be automated. It's kind of like somewhere between a bus and an Uber, right? It's super cool.
Right.
So I hope that you get some of the consolidation that Evan's pointing to, which would just make a ton of sense instead of them really competing so much, because that would really elevate something bigger that could be competitive to an Uber or like the robo-taxi type setup. So but it does come both ways. So you're almost competing with this autonomous driving with another version of autonomous something to get things to you. It's
that's a fair point.
So freaking efficient these days. So.
Well, but it's interesting too, because I've heard Musk say on many different occasions, like, the actual amount of time that you use your car, right? Versus, most of the time you drive to work and then it sits there in the garage all day long waiting for you to come back out, right? So in theory, like you could have the same number of cars on the road, but those cars are all working and much more productive, right?
It
by
doesn't
servicing
work
a lot
that
more
well,
people,
though.
right?
It really does. So I've run that model before, and it works in some time. It works in some scenarios, but it mostly doesn't work. And the reason is because everybody typically commutes at the same time. So at the end of the day, if you don't own a car and you're relying on the network, and nobody owns cars, and everyone's trying to commute between the same hours of 7:30 in the morning to 9:30 in the morning, you will have a shortage of cars.
Sure.
And so what ends up happening is you have you have these influxes of cars operating, and then they're all sitting around doing nothing while everyone's at work. So you need to have some sort of balanced network where, like, it's similar to the bike share we have in New York City, where like if you can't get it during rush hour because everyone's commuting during rush hour, and so
that is true.
Like you have to have some sort of rebalancing mechanism. But so you have to have some sort of rebalancing mechanism to make it work, where everyone can just, like, your car is just sitting in the parking lot waiting for you when you're gone. I think that it will result in some people having ownership, and it will be it needs to be figured out. But what I think people sleep on is that so many people today, like us, choose to live in a city because we appreciate the walkability and because we don't want to own a car.
Right.
But I can see a massive migration of people that would be considering moving to less expensive places where you could have really inexpensive direct door-to-door transport to urban centers. And so it could create a migration pattern, which could, it has a massive impact across the entire market. It's going to change the way we do everything, in my opinion.
Yeah. Well, maybe that's the
effects.
Yeah, maybe that's the point to end on, right? Is I think that with the regulatory challenges, headwinds removed, right? I think this autonomous driving thing is going to generate some opportunities. I don't know if those will be in the private markets or the public markets, right? But I think as this starts to play out, there's going to be some investment opportunities here, right?
Tons of them. I'm ready. Take my money. Let's go.
Yeah. So I mean, I'm keeping my eye on this one too, because I got to be honest, as like a person who raises capital from investors, this is such an obvious one because everybody drives or is in and around cars, right? So something like this happening is like very disruptive to people's day-to-day lives. Totally. So it's natural to be like, oh yeah, I see this coming on like what opportunities exist or persist through this thing, and how can I take advantage of it? Right? It's such a natural thing.
Yeah, no one's going to argue against that, right? No one's going to say, oh, there are going to be fewer autonomous cars next year. No, absolutely not.
For sure. And plus, dude, you're in the burbs or whatever, or even in the city, and all of a sudden you see, like, if you're in New York City and I'm sure in San Francisco, they're standing around seeing Waymos drive by without cars. It's like a much more real thing. So like all of a sudden it's not there, and then boom, it's there, and it's like this real thing that's in front of you, and you're like, oh, this is only going to get more, pervasive, right? And everybody's going to be doing it. So it's like it's a really interesting investment theme.
Yeah, Aaron, keep an eye out for some companies that do charge tech, because if you have a network of self-driving cars, we need way more chargers. We need way more power consumption. Where's our Clint Sorensen picks and shovels bet? Like, you need maintenance. You need maintenance. You need electronic charging stations. You need pickup slots. All this stuff. There's tons of investment opportunity there. LiDAR technology. Everything.
Well, that's the picks and shovels. Like I think all the stuff that would make a car go autonomously is interesting because you'd have to imagine there's a lot of cars on the road right now that obviously have none of this technology in it. So to the extent that someone like makes a kit that you could throw on top of your car or whatever, make it work, and it's all of a sudden it's autonomously being able to autonomously drive. You know,
For sure.
my understanding is a lot of the Fords and everything. Like I was, okay, I'm driving I don't have a car. I was driving my father-in-law's car, right? He's got like it used to just be cruise control, and I don't drive a lot, right? But he's got like 8 different things on there that you can turn on: lane stabilizer, pacing from the car in front of you, and I'm like, this is crazy. Like I think I drove an hour and 45 minutes, and I didn't touch the gas pedal or the brake. Right. I had my hands on the wheel, but the thing was turning. We were on the highway, right? It was down the turnpike, the Jersey Turnpike. It was effectively driving itself for like an hour and a half. I was just sitting in the chair, right, with my hands on the wheel. But like, I mean, that's all. I would have to imagine the stuff that you would need is there in that car already. You just kind of have to like flip the autonomous switch and that thing could drive on its own for the most part, right?
And now you want it on the road not for an hour and a half, but for 15 hours a day, 20 hours a day. And with the new setup, you know, electric motor versus a diesel or a gas engine, totally feasible. Totally feasible.
Yeah.
So, yeah.
It's coming.
I'm lucky if I put 5,000 miles a year on our car, family car.
Right.
I drive it once, maybe twice a month. And then think about doing that 20 hours a day times 30 days.
Yeah, that's a huge difference.
Yeah.
Jiffy
I
Lube.
love it. Yeah, I love it. All right, fellas. This was a good one, man. Appreciate you guys' time today. Thank you very much, as usual.
Thanks, guys. Talk to you soon.
All right, fellas. All right.